Morning and welcome to today's live show. We do have those daily expected moves in red on your chart. We're already at one to start off this morning. Black Monday did not end up working out, right? So it's a good thing that we are paying attention to. And thank you so much to our indicators for giving us the divergences from Friday to tell us, hey, watch out because there could be some sneaky things going on. Even if you see everything as bad going on in the world, well, it still depends on how the money is moving. I do believe that at this point, I am looking for some kind of 2 hour just quick trap if that is going to be the solution here. But as this has drawn out for some time, if this isn't going to be a quick trap with potentially, I would say, GDP, well, then we could actually see this continue for a longer period of time. So we'll see if that's able to take place. I am still leaning towards some kind of trap with GDP as of right now, but let's see what shapes up on the actual day to see if it has a good probability to play out. It is very funny though, because if you think of the psychology of the market right now, a lot of people were negative. We're going down. And then we just start to go, it does sound a little bit off. Give me a moment here. I noticed that there's a difference here. Hold on. Okay, how about that? Is that more normal? Sorry about that. I have my I have these really nice headphones, but I think they're not built for like daily use, and so they always peel, and every year I send them back and I get a new pair, and right now I'm in the time where I have to use my just little Bluetooth like gym headphones. So I think the mic was on my gym headphones, and that probably sounds like garbage. So I apologize for that. But I have to send those headphones in once a year. They always peel and they always send me a new pair. So I'm like, okay, sick. I just get a new pair every year. I was like, maybe I have a misshaped head or something like that. They keep peeling and they just sit at my desk and go on when I stream. So it's very funny. Um, but the psychology right now is very interesting, right? We are seeing a sporadic upward move right as everyone was really thinking, like, oh, the world's about to go to shit. The truth of the matter is, whether we do it now or whether we do it, extending into, say, next week, this is not adding up to something jolly and good. You have not tested the lower levels. So, unless you are going to see a gargantuan squeeze like this, you are still very vulnerable to come down to here or to come all the way down to my little circle down there if you forgot about it. So just be aware that people are flipping. They had all these negative things, but the market didn't go down. So now they're just going to ignore those negative things. And then something actually negative will probably tip over this market or be utilized as an excuse. So I think if we pay attention to the money this week and next week, we will be able to figure out, hey, how likely are we to be topping on each day? We can really focus on stuff like that. You called 600 on SPY. That's facts. Yeah, well, really, if you want my call here, I think we could go, especially 605 is really where you think you can get to. So 605 is your next call wall for Friday, but since we're doing it so early on in the week, that gives people the opportunity to maybe roll that position to say 610. So 610 is on the table if we continue to see upside in the morning, and then we decide to pull back, and then we head to the upside again on Wednesday, and then we could go through something bad, and we could do that all up towards 610 if we actually get the rolling. But right now, the two levels that you really want to pay attention to that aren't part of your daily expected moves, those are very important, right? But the levels of 600 and 605, you're kind of in that range where you could do this before you want to go higher. As you are at the daily expected move very early on in the day, you day traders can look for your little signals up here on those short time frames and see if this is something worth. I'm sure Chris is a little bit excited right now. Because he needs to investigate you for yesterday's levels. Yo, yesterday's levels were so damn good. Like, I was really hoping some day traders that like watch our stuff were happy about that, because a lot of that was crazy. Now, yesterday though, let's really get to yesterday just for a moment. This was a moment where it could have really gone wrong, right? It really could have gone wrong. You saw strong confirmations below, and then it just confirms right back up, and we do what the next day? Boom, to the upside. So very nice. You can see the ending direction, even with the fake out move to clear everyone's stops. I think that's I hate when the market does it because technically a roll here is really bad, but then you create what? Just a super steep, like almost divergence at that point. Very, very close, I would say. And then you just curl up by the center line and it just goes boom. So the direction was overall shown to you in the end, but there was like a management for the trade. Get back in the trade, make your money this morning. I don't necessarily do trades like that. I really like to take the 2-hour move. So I really like taking this entire move, right? So I would try to be in somewhere in here, even with that hiccup, and then I would see if I can get into that, and then I'd be holding this till like now. So I'd be holding it for a few days, maybe even to the weekly expected move at this point. That's how I like to do it. But people do it in totally different ways, right? I can just, since I only think there's going to be one leg of the 2 hour, sometimes I let like if I think there's going to be two legs, right? If this thing's stretched, then I could sell the position or sell some of the position, get back in on the pullback, and then ride that to the monthly expected move. So I can keep the contracts here and reload them here after taking profit a little bit right there. Those are the type of trades that I really like. Like, those are probably what I do the most often. Microsoft broke its monthly expected move. Yeah, I think that we were kind of saying like, hey, this is likely to do so. Like, if you're really paying attention to how we're talking about the market, it's kind of hard to be like, Microsoft's just going to go down while we think the SPY is going to go up and make a new high here and get to like maybe even 610. It's like, so Microsoft would have to almost go up. Now, notice that it saw that strength through, and now you're still set up for, I don't think you really violated all the divergence points you wanted to. I still think you have this steep downward move. And the daily scale can give you a divergence soon. I actually would be perfectly fine. I'm actually perfectly fine with this look, and Microsoft looks like it's going to top in the next like 2 days. It genuinely does. I'll say sideways is on the table, but I do not see like a 500 for Microsoft right now, unless we just get that mega squeeze where like all the world's problems are solved at the same time. Yeah, Microsoft's going to be a rough one, I think, when it actually tears down. The implied volatility on Microsoft is always low, so the teardown's always unexpected. So if you if you ever look at a stock and you look at implied volatility and you see a stock do something crazy, but the implied volatility still remains low, those ones you can actually make a shit ton of money off of, because when they do something unexpected, the IV spikes, the premium spike, it's pretty crazy. Look at Meta. Let's go, Meta. Here we go. Meta is curling to the upside. Now for Meta, this is going to be an interesting time because Meta is, I believe, at that weekly expected move. We kind of discussed this a little bit over the weekend, kind of what I'm looking for. That is some very, very good strength. What I'm really looking for a simple short opportunity is I want it to show me all the reasons. I kind of want it to show it to me on the 30-minute. I want the 30-minute right here to go high, right? Come back down and then go up again, right? I think that would be the best. And if we want to do that very quickly, that's fine. We just come down into this area, we pull it back, we go up on Wednesday, and then we set the trap for, say, like Thursday. I really want to see that. I think that would be super interesting. But if you were long on Meta, this says decision-making opportunity. If the 2 hour is able to roll back down, I'm still going to count that bad boy. I do not care. But the daily divergences and things can form now. So looks like we're going up into where? Exactly where we kind of thought we would. We thought we'd end up in here. You guys remember that line we had over here? It was just a green line, like I drew it like this. This is where we wanted Meta to get to. Now Meta has the chance to just do like this and then curl up. It could do this and curl up, but Meta is another one that could go wham all the way down to here if it really wanted to. So it's a very high performing stock like Microsoft. This is what I'm saying. These ones are actually at risk of seeing a bigger dump, and it would be, the implied volatility would be lower maybe in Meta. I know it's in Microsoft, and therefore, like, if you can do it at the right time and you actually get that dump in the stocks where the IV's not high, yeah, your premium increases very, very quickly there. Looks like we're remaining to the upside for now. We will look for any, oh, the testimony starts today, doesn't it? Hold on. The testimony starts today, correct? Yeah, 9 a.m. Here we go. We're going to have reasons to pull back today. We will have reasons to pull back. And as we're outside of this, you would say, hey, what are the percentages telling you? They're telling you a little bit like, hey, we have an event going on today. Watch for volatility because market makers most likely will want to do what? Reach down for that liquidity right in here, right? They want to come back down to here. They don't have to come all the way back down. There's probably plenty right in the top side here. They just have to come probably down into this to actually scoop up and go higher. And that's all you need by Wednesday to set up a potential trap. Very, very nice. Watch out for Jerome Powell testimony. I can pull it up if you guys want to listen to it. Would you guys like to listen to it? And we'll go look at hymns. Let me know in the chat if you want to listen to a little bit of Jay Pizzle. I think we can, right? Go look at hymns. Oh! Oh, it's still so ugly. Oh, God. Let me try to do this a little bit better. Okay, well, we know what we need to break through. All right, just trying to make sense of it. A good thing to do is just make sense of the simple things, right? Okay, so if we get past this, that's good. What can we be going down to? We never really built those good blocks in here, so the only one you can really have is like here and here. We're in that one right now, so we'll say let's mark this one off. That's where the lower high for the overall gap, like the test of the gap was. So let's try to mark that one off. Right, we'll go like this. And once you do that, you just go, okay, this looks like a Tesla, right? And I'm looking for a reversal signal right now. So what are you looking for? 30-minute high or low, 30-minute divergence. That's all you're looking for. At least if you're going to do things how I like to do things. That's what I would look for. So as it stands, you have some dramatic things going on. The weekly could cross down and this could get ugly. So if this zone is lost, well, one, we need to make sure you understand by, changing the colors. I don't normally use colors or anything, but I think it's fun. Makes the chart look like Christmas, and you understand that losing this would be a bad thing. That's why it's in red. Taking this back would be a good thing. So what you really don't want to see from this is just, you'd rather see ping-ponging and then a break, ping-pong, and then a break. But there is the chance that you just break through one of these zones, so you always got to mention it, and then you can use those as resistance. So what you'd rather do here is just see a nice reaction up, get above this halfway line, and then maybe curl back down just to grab some buyers to break through. And then you might get a big move and you'll revisit this level later to actually go higher. And that's how you'll overall kind of make a trend. That would be the bullish thing. The bearish thing is just the opposite direction, right? Maybe you bounce up to this zone, you reject again, you come down, then you try to go up again, then you actually break down further. Right? So either way, that's pretty much what I would look for here. As far as technicals go, I think your still daily is in positive territory. We'll see what happens. 2 hour, pretty damn negative. So that's going to be a problem. And the 30-minute has not made a higher low or a divergence at this point. So you might get a reaction where we touch that 5, then we roll, and we'll see if that makes a divergence. We'll see if that makes a, I guess, higher low at that point as well to go up and test these levels. But you're technically not back on the bull until you at least peek your head above this. Then you start to open up that door. Very nice for hymns. Let's see. Pull them up. Put J Pizzle for shizzle dizzle on, you know what I'm saying? I'll look at Nike, and then I'll go pull up J Powell. He's not on for 20 minutes. I like what Nike's doing here. I do like what Nike's doing here. It really wants to continue to do this. You might see any time now, you could see that 30-minute retest of the 5. Just really I know I've been pointing out these areas like this, but you could really just use this blue line as a guideline, okay? If price comes down to that blue line, start to pay attention, okay? You don't have to overcomplicate it. That's why we use indicators, so we don't have to overcomplicate things. You can literally look at the 5, see if you break through that level, watch when you get close to it, and see if you're able to curl up, right? So if this is going to keep going, I want it to keep going. I want it to take out all of this. So I want it to get above 6230 area, do something like this, then dip down, take care of this gap, really shake people out, and then just curl back up. I think that would be fantastic. As far as it stands, though, all you're looking for here is 30-minute pullback for now. The 2-hour was able to cross up. It is still in negative territory, so you really want to make sure that 30 minutes continuing. You don't want to take out this low. You actually want to see this quick 30-minute thing like this, and then you just keep heading to the upside. And your goal is to potentially get to these levels. Yeah, that looks about right. So as you've made new low here, be aware if you start to reject and roll on the 2-hour and you see that confirmed down, if you're really waiting for confirmation at that point to get out of a trade, well, 2-hour would say, hey, this daily chart is not going to curl up. If the daily chart's able to curl up here, though, what do you think happens? You break through, right? We start to break through. We start to build back into this type of area, and we go test something up in here. So you're just hoping no 2-hour roll comes. 2-hour roll, 30-minute roll right now is fine as long as it cashes itself, right? You got to see if that positive trend's going to continue. But if the 2-hour rolls, it's not a good time. Yeah, I don't think they're coming back. I think they have too much. There's way too much above you to really like say, oh yeah, this is going to be a comeback. And you broke through your little wedge that you were creating. If you really look at Nike, like say I bought Nike at $140 and I really want Nike to get back to there before I sell it. How long do you think it's going to take me to do this? When you have so much stuff below, that's just like, okay, resistance all in here, resistance in here, resistance right here, resistance right here, resistance right here, resistance right here, and that's still not 140. So this is, I would say, very likely to continue. But I'm just saying right now, it's going to try to go into a positive trend to at least probably test this area right there. I think that would be very interesting. But you see that we're below 77.46, so we might rotate back down. So in order to really say like, oh, Nike could be good, you have to be willing to take on an investment that's losing and at the same value as 2020. And then you also have to say, oh, everything's going to get better on the business side of things. They're not going to be hurt by these tariffs, and everything's going to be fine in 10 years. That's how you have to think about this, is more like an investment in Nike because it's a big company that's going to potentially be around for more than 10 years. Hey, the price will be better in 10 years. That's where you take on risk, right? Because you don't know 100%, but if you can make an argument for it and then have enough reasons, then why not? I'm not the biggest fan of Nike. You guys know that. I'm not investing in Nike. Just here's my weirdness. This is why I won't invest in Nike. I don't like their shoes. Like, I don't like their shoes. That's the only reason I like don't really like invest in Nike. Is like I've never even really looked at that stock till like YouTube. Because like they don't fit my foot right. Anytime I get them, they just scuff up real bad. Anytime I get like they're not the shoe for me personally. Lucas is sponsored. No, it's sponsored by New Balance. No, the dad brand. That'd be sick though, dude. I want to get sponsored by a shoe company because of this. That'd be sick. You guys don't want like 20% discount on shoes? On some dad shoes? Come on now. Oh, I think their basketball shoes are probably insane. Like basketball shoes are different. We're not talking about the same thing. Like you have to make the basketball shoes good. You have millionaires wearing them. Yes. And I'm saying for me, Dab, and I think plenty of my friends like them and they like them and they're good, but it's just a personal thing. Today's the euphoric feel and I'm putting hedges on. Richard, God, I love the way you think, buddy. We've come a long way, haven't we, Richard? I got a frog in my throat. Yo, no, I have pickleball shoes. And they're A6, mother. Don't mess with my pickleball shoes. A6, baby. And I got all white to look like a little tennis biatch. You know what I'm saying? My family are tennis players. They're like all state champions, and um, Actually, my cousin is what? He's in the top 10 pickle players in the United States. Like he plays in those crazy tournaments. And I'm pretty sure my other cousin, who's a girl state champion, she does it as well. It's very, very cool to like see. And then they kick my ass every time. My 80-year-old uncle can kick my ass in tennis like it's nothing. He can kick my ass in pickleball and tennis like it's nothing. That's how good they are. And I'm like, God, this sucks. All right, anyway, random thoughts. Let's actually look at MSTR. We haven't looked at MSTR. I just randomly saw it. Hey, a bunch of little divergences here. Ooh, wait a second here. Oh, we came in we just went wait. Okay, we'll look for a fade, but very nice. Okay, so the 2-hour chart here is at a higher point. Okay, this is at a higher point. What you'd be looking for here is, can we actually cross through and get the new high? This is actually a great... The setup itself, the bars themselves are not the prettiest, but this is a look that I genuinely do like, because you technically do have a slightly higher low, not necessarily for the 2-hour scale, but it's going to be almost like a daily higher low with a double bottom. So you have the potential for double bottom here, which is why I like it. I think that MSTR with this type of signal can cross through and see something good here. Now, it might just be rejecting from this very quickly. The stock can move very fast, but this also can... Let's talk about the negative things too. What you want to see if it's going to continue to head higher, I would say, is at least a break above 388.16, but technically you would need a break of the high. Either one of those, though, if you want to reload at that point to head higher, I think would be a good thing, even if it's from up here as well. But you're using that 5 as a guideline because this is kind of a little bit of a risky week if you've been looking at the market. Now, we might have been able to open it up and continue it for another week. We'll see what happens this week, but I think you got to be having your warning lights just flashing for GDP. Now, the only thing I will say to the negative side, if you like make a 30-minute divergence here at some point, just pay attention, because if this 2-hour does not exceed at least this level of 388, you do have a lot of things suggesting like we could just roll this and make that new low, and all of this could be some kind of structure to head down, some kind of structure to head down. So be very aware that this could just be still like a big, on the bigger charts, 1, 2, and still needs 3 to get to this white line. So just be aware of how downside can happen. I think you have a chance for a good reaction here, but it's how good will that reaction be? And if it doesn't take you above this high, I think you have to watch if you roll. So that's the best I can do with MSTR right now. I don't hate the look. I think the daily really wants to get going. If you're holding on to MSTR, I hope it does. But I still think that you have the opportunity to do something like this before you're able to turn up. So just be aware of it. And if you're like, hey, I want to take on risk because this one is playing out right now, okay, then I take that risk and I understand how it goes wrong. And then it's very, very simple. Right? Simplify the trade, write it in your book. I got my new pens in so I can write in my book a little bit better. I'm excited. I'm going to do things really, really much so how I was doing things just a few months ago, actually, and it was doing really well. I'm starting to write down my thoughts again all the time, which was really helpful, especially for YouTube as well. So like the time where we were calling this stuff and this stuff and this stuff, I was journaling the whole time. So when I journaled, I really was able to write my thoughts and pick the ones that made the most sense. It was very, very nice. So I'm going to do that again because we killed it in there. And we're doing all right now. I'm going to hold myself to a high standard and say we're doing all right, but I want to keep doing even better as we go reach for this top, and it's almost game time, in my opinion. You're about to see the big move down, right? You want to catch potential moves to the downside and then moves to the upside. That's perfectly fine. I'm still debating if I want to wait for daily pullback. So VIX, as it stands, I think you are very likely to see this retest into this type of area and then roll. What I am looking for going into Wednesday is going to be, does volatility build up and does volatility turn down? And then by the end of the day on Wednesday, are we confirming a 30-minute divergence right here for volatility? That is what I will be watching very seriously. That or a higher low I will be watching very seriously. because if this 2 hour is able to curl up, I still think that we have the chance that this could get a solid reaction. The daily chart has not crossed down. So if this is able to catch some steam with the potential structure of left head, right shoulder, I think this could be a problem for the market as the market continues to go to the upside, while a lot of stocks are at their monthly expected moves. I like to randomly give just my assessment. If you didn't notice, I notice that I do that sometimes. I'll get bored because of my ADHD, and I'll just like talk about what I think's going to happen again so that people who maybe weren't here 10 minutes ago can hear it again. It's probably melted into you guys who hang out here all morning, like probably melted into your guys' brains at this point what I think's going to happen. GLD looks like it hit 300 today. GLD looked like it wanted to curl up, didn't it? This is what's so interesting is it looked like it wanted to curl up, and then it just breaks completely down. That's, I mean, if you were wanting the market to buy some time here, this is exactly what you want to see. As it stands, you're breaking a lot of critical things here. So we're going to keep that middle in that middle zone. Very, very nice. But you have a lot of things that suggest like, oh, is this going to fall through the floor all of a sudden? Are we about to see that? What if we get the euphoric squeeze, you know? What's going to stop this? What if nothing stops this? That's always the worrisome thing. You know, most of the time I'm always thinking something's going to stop it, you know? That's why we just look for if the signals confirm. I think futures are just so much better to look at, though. The more I've looked at this, the more I've just been like, okay, futures are so much better because you'll actually see rejections and things like that. Like if you're going to do trades on this, it would be very nice to see this on Monday and see that as a clean rejection where your GLD chart doesn't really show it like this very much. Look at the very clear rejection here to be like, oh, I shouldn't be in longs. It's just so freaking clear. It's insane. Like, look at this big bar. Now, this one, you potentially could have made a decision, right? No real pathway to go higher right here. So you're like, okay, maybe I need to make a decision, but at least you see it. GLD is just so, it's just a gap every day. It's just a gap every day. It's so lame. Let's put it that way. And I've made money off GLD. I have made money off GLD before, but okay, I'm going to make sure to try to get Mr. J Pizzle for Shizzle Dizzle up on the stream, or at least so we can hear him. Let's see, do we have a stream here? Come on now. He's going to get so many questions. Can I watch it live? Okay, I don't trust any of these sources, so I'm going to wait a little bit longer. You guys see it? What about Tesla today? Tesla, once again, what is very likely to happen from here? Well, 30-minute pullback is still very likely. So 30-minute pulls back. You can continue to go sideways. It's fine. But pull back, then we curl to the upside. Then we set the trap and we actually turn down. And you see this 2 hour confirmed down. And then you're coming back down into this zone, where if you lose that zone, you can head down to this type of area. So the only thing that makes it so Tesla doesn't do something like this is a mega squeeze. You got to squeeze through. You have to raise the floor to use this zone. So if you want to see something huge for Tesla, you need that to just pull back and just go. And then it can revisit these levels on like a 2 hour pullback and still continue to the upside. Right? It's not like crazy to say. Now, for this, though, you just want to be like, okay, what's very likely this week, though? What's the SPY saying? What's this? Then you pay attention to your confirmations, but you're still aware that this is a huge possibility right now for Tesla to be doing something like this over time before it's able to actually go to the upside, like break through this. I think you're ping-ponging. I said that, you know, way over when we actually broke down to here. I said, I think you're going to ping-pong. Ping-pong means you're kind of like between a resistance and a support, and you're just kind of bouncing back and forth for like 1, 2, 3, 4, 5 pushes. It does, H, doesn't it? That's why I'm wondering, is something surprising coming? It's not necessarily weird for Tesla. It hits the weekly move and it just starts to go, okay, now I need to pull back. That's all it is for Tesla. You're not seeing like rip, 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 right? But you are just seeing, oh, we hit this. Okay, now we go sideways or we pull back. And then we look for probably 340. Then you just go, okay, that 30-minute, then we're going to curl up. Once we curl up, if we even make, well, the thing about this too is Tesla could do this, right? Because isn't the, okay, I'm going to pull it up because I'm being dumb. I literally have them right here. Yeah. So Tesla technically doesn't even have to go make a new high now. It can make a lower one. Make a lower one as well. So I'm not someone who likes to chase the last little 30-minute move. I'm just not that guy. If it's part of the 2-hour move that I am in, that's fine. But I'm never looking at the 30-minute going, oh, let me take this little 30-minute swing trade for 4 points. That's not my play. If that was my play, I wouldn't be using 2-week options for it. I'd be using like 3-day or something like that. So I think Tesla pulls back, and then Tesla gives you a divergence or a lower high. And I'm actually starting to think lower high from Tesla for the time being. We'll see. SPY starting to come to the downside as people prepare for Jerome Powell. My goodness. Is it just people look at his tie? Why is it falling again? Well, I think if the SPY is going to pull back and the Qs are going to pull back, you're going to see mostly pullbacks across the board right now on the 30-minute. The structure that we showed here was like this, like this, like this. That's your lightning bolt. What have you done? You've done this in a very bullish fashion. So what do you think's going to happen here? We're going to pull down, and then we're going to cross back up. You might not even cross on this MACD. It might be quick. I think it'll drag out for a bit of time, and then we'll start to do this. I think it'll like drag out into the last couple hours of the day or after Jerome Powell's talking at the least, and then we start to head up again. Yeah, I think at some point today we're going to confirm a like pullback, like a little low. You're an investor, Ari. Wonder if that plays out. This would be the nicest hint, like going into end of day on Wednesday. This would be the nice hint. And this will just like not confirm down. If you confirm this down though, holy shit, you could literally go to monthly expected move. That's how important this stuff is. Like, that's how crazy bullish this move has been. I think it's coming sooner rather than later. I think I'm like, yeah, do we want to make people feel good for the 4th of July? That like I'm always thinking the mentality. I'm like, what do we want to do? Make people feel at ease for 4th of July, then see something bad? Or do we just want to show them something bad before 4th of July and say, hey, 4th of July is awful, right? What's going to be the narrative in the news politically? PCC looks pretty bearish. Like people are just shorting the event. People are hedging too, by the way. Like people will hedge this event. We just hit like almost a new high, right? Did we hit a new high? Yeah, we hit a new high. So people are going to hedge. Right? The actual very likely thing, with the very cool thing, how you extend a Friday is you get a full on pullback here. It's like two options: big ass pullback, no new low, or just mega squeeze. So the way you actually extend this into Friday, in my opinion, is you actually curl down through Wednesday, and then you scoop back up on Thursday, and then you continue that into what? Next week. That would be wild. I don't think so. I think we're just very likely to see something like this, and then it's kind of problems, but we'll see how it shapes up. If we see a risky signal, I'll point it out. If we don't, then what does that mean? Hey, we're probably going to continue to do irrational things. Jerome Powell on Fox. Okay, good. Let's see. I just have the weirdest like streams popping up, and I don't want to do that. There it is. All right, we'll see when that gets started. Holy crap, I got to turn down these headphones. Oh my goodness, those are bad. Okay, they're not starting yet. Nvidia's about to launch like a rocket. I mean, yeah, 2 hours confirming up. That's good. Like I said, that's your opportunity to like violate divergence and things like that. Let's look at this from this perspective. Yeah, you still could see that 150 at some point for Nvidia. If it really wants to do something crazy, it just spikes up to 150. But unless you bought yourself the time for past 4th of July, I don't think you have time to get there. We'll see. That's just a tough one. I'm sure maybe day trading wise for a couple points, you're probably good with that. Sorry, I'm reading the chat, and it's all traders. It's all traders in the chat for. Eh. Am I behind? Is Jerome talking? Like, is my stream behind? What if we mega squeeze? We just blow off top. Yeah, I'm just waiting to hear, but I hate these. I genuinely hate these. It's literally all politics. Nothing about it is actually going to solve things, and it's just used as a reason for like dealers to go grab liquidity. I hate these. Anything that's important, they're like, we will make, oh, I haven't got that with me today, but I will give that to you on a later date. Let me meet up with your staff. And then we just never know if that even happens. I'm just like, ugh, I hate these things. Okay, good. Thank you, Will. I'm going to try to put him up in a second when he actually gets going. All right, we're kissing ass right now. AMD. Ooh. AMD. Ooh. Oh my god. Yo, AMD is a nut. Hey, we said continue to squeeze if you want, and it said okay. AVGO's doing it too. Holy shit. It's Palantir. No, Palantir's not there. Whoa. Aw, poor wolf. Okay, let me turn this on.
Has caused countries around the world to question the primacy of the US dollar going forward. This is one of the worst market responses, I think, to the chaos that we're seeing the tariffs that are very destructive to international trade, and just everything that the markets are seeing and trying to suffer through. I know I'm contacted all the time by businesses in my district, manufacturing businesses that can't even start thinking about investing with the level of chaos just from the tariff policy alone. Anyway, there's a long set of things we should be talking about, and I'm happy to save some people some time, and let's get to it. Yield back.
Gentleman yields back. I recognize the Chairman of the Task Force on Monetary Policy, Treasury Market Resilience, and Economic Prosperity, Mr. Lucas, for 1 minute for an opening statement.
Thank you, Mr. Chairman. Today's hearing will allow us to evaluate the state of the economy and review the FOMC's policy decisions. It's appropriate to regularly take a step back and assess the central bank's performance and its responsiveness to the economic conditions our constituents face back home. This hearing is particularly timely conversation as the Fed wraps up its 5-year framework review, including a thorough look at the consensus statement, communication strategy, and other guiding policies that will have a profound effect on the lives of every American. Many of these topics we'll discuss today we've taken a closer look at in the Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force. I look forward to building on these conversations here. One issue that I think warrants special attention is the binding nature of the SLR and ESLR on the Treasury market intermediation. I'm glad to see the Fed is looking into this tomorrow, and I hope we'll see meaningful action soon. Chairman Powell, thank you for being here. It's critically important that Congress and the central bank have an open dialogue. Transparency, accountability, honest communications are pillars of our system's success.
Yeah, we could get like another leg
testimony
like
on the
this.
state of the economy,
I see what you're saying.
the Fed's plans for the future, and I yield back, Mr. Chairman.
Gentleman yields back. I recognize the ranking member of the Task Force on Monetary Policy, Treasury Market Resilience, and Economic Prosperity, Mr. Vargas, for 1 minute for an opening statement.
Thank you very much, Mr. Chairman and ranking member, and thank you, Chairman Powell, both for your years of public service and for being here today. Since 1977, the Fed has been tasked by Congress with its dual mandate goals of achieving both maximum employment and stable prices. Unfortunately, this administration has made accomplishing these goals more difficult. In the Fed's most recent summary of economic projections, we see a forecast for slower growth, stickier inflation, and rising unemployment, all of which point to a potential stagflation scenario.
It literally could go
Whether it's
through
the president's
July 4th,
indecision on
like
trade
you could
policies,
literally
hiring
go through the
freezes
first
impacting the collection
like 2
of
weeks
economic
almost
data,
of July.
his ballooning of the deficit,
It can
cut taxes
be
for the
irrational
wealthy,
for a long
or his
time
name
until something
calling.
bad happens,
All
so
of these
that's we're
actions
trading
make
like
it tougher
water
for the
while we
Fed to do
form
its
a
job.
top. And
I
if
look
it's an
forward to your
early top,
testimony
we'll see
today,
it like
Mr.
with
Powell,
GDP.
Chairman Powell, and I yield back with that.
Gentleman yields back. Today, we do
earliest
welcome
top
the
would have been
testimony of
last
Honorable Jerome
Wednesday
Powell, Chair of the
or
Board of
Friday.
Governors of the Federal Reserve System. Chairman Powell, we thank you for taking time to be with us. You'll be recognized for
Swifter. It's
5
been
minutes
great.
to give an oral
It's been a
presentation
good time.
of your written testimony, and without objection, your written testimony will be made
liking
part of the
it.
record. You're now recognized for 5 minutes.
Yeah, these new pens are sick, just so you know.
Mike?
Thank you, Chairman Hill, Ranking Member, and other members of the committee. It's great to be back here today. I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position.
I wish you could, Richard, I wish you could just bet squeeze or no squeeze.
The labor market is at or near
like
maximum
just that.
employment.
Yes or no?
Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. We are attentive to the risks on both sides of our dual mandate. I will review the current economic situation before turning to monetary policy. Incoming data suggests that the economy remains solid. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate.
Ooh.
Within PDFP, growth of consumer spending moderated, while
That's
investment in
bad.
equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, reported a decline in sentiment in recent months and elevated uncertainty about the economic
That's
outlook,
a good overbought
largely
reading, though.
reflecting
I like
trade
that for the
policy
RSI.
concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged a moderate
that'd be
124,000
nice.
per month in the first 5 months of the year. The unemployment rate at 4.2% in May remains low and has stayed in a narrow range for the past year.
He's like an
Wage growth
AI.
has
Like
continued to
AI writes
moderate
his speeches.
while still outpacing inflation. Overall, a wide
I think
set
we
of
end the year at
indicators
new
suggest that
all-time
conditions
highs.
in
I
the
think we
labor
end the
market
year
are
near
broadly
new
in
all-time
balance
highs
and
again.
consistent with
I think
maximum
that'd be
employment.
sick.
The labor market is not a source of significant inflationary pressures. The strong
Like
labor market
again,
conditions
like
in
if we
recent
see him
years
here,
have
I think we
helped
see it
narrow
again at the end
long-standing
of the year.
disparities in employment and earnings across demographic groups. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative
He
to our
is
2%
ChatGPT.
longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total personal consumption expenditures, or PCE prices, rose 2.3% over the 12 months ending
So
in May,
quiet.
and that, excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures.
You know, it's so funny when people in
Respondents to
their
surveys
chat
of
say,
consumers, businesses, and professional
yeah, whatever. When people say in their chat like war is really bad for the markets, they don't know about money pumping. Like it's literally the opposite.
policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. With the labor market at or near maximum employment and inflation remaining somewhat elevated, the Federal Open Market Committee has maintained the target range for the federal funds rate at 4.25% to 4.5% since the beginning of the year. We've also continued to reduce our holdings of Treasury and agency mortgage-backed securities, and beginning in April, further
Yeah, Richard.
slowed the pace of this decline to facilitate
Where's awesome
a
for
smooth
volatility? I'm
transition
saying like later
to
on.
ample reserve balances.
If you allow them
continue
to
to
print
determine the
money,
appropriate
then
stance
it
of
doesn't
monetary
matter.
policy
Let it pull
based on
back
the
for
incoming
5
data,
years.
the
It's going to
evolving
be up
outlook,
at
and
new
the
all-time
balanced
highs in
process.
10 years.
Policy changes
Like it
continue
doesn't
to
matter.
evolve, and their effects on the economy remain uncertain. The
Prolonged
effects of
wars are
tariffs will
used to
depend, among
pump
other
money.
things, on their ultimate level. Expectations of that level, and thus of the
Gives
related
another
economic
excuse to
effects,
raise the debt
reached
ceiling.
a peak in April and have since declined. Even
Always.
so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also
Short-lived.
possible that the inflationary
He didn't write
effects
this
could
speech.
instead be more persistent.
He
Avoiding that
didn't
would
write
depend
this
on the
speech.
size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well
Does it
anchored.
get louder if I turn him?
Our obligation is to keep longer-term inflation expectations
No,
well anchored and to prevent a
Thought it would turn
one-time
up for you
increase
guys.
in the price level from becoming
Short-lived.
an
He
ongoing
definitely wrote
inflation
that
problem.
speech, guys.
As we act to
Because
meet that
everything's so
obligation, we will
short-lived.
balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. For the time being, we are well positioned to
Yeah,
wait to
broker.
learn more about the likely course of the economy before considering
100%.
any adjustments to our policy stance. To conclude, we understand that our
Yeah, he
actions
does not want
affect
to be here
communities,
this
families,
morning.
and businesses across the country. Everything we do is in service to our public mission.
You always
We at the Fed
cough
will do
before
everything we
saying
can
that
to
part.
achieve our
He
maximum
always
employment
goes,
and
"Is
price
to
stability
achieve our
goals."
mission."
Thank you. I look forward to your questions.
Thank you, Mr. Chairman. We'll now turn to member questions. I recognize myself for 5 minutes for questions. Over the past few weeks, our Democratic colleagues have suggested the following. After the initial release of the GDP report, the president is driving the economy into a recession. Chairman Powell, the latest FOMC statement described economic activity had to continue to expand at a solid pace, and you just reiterated that in your testimony this morning. In your view, is the term recession and the economy growing at a solid pace, are those synonymous with each other?
I would say no.
And you note that the labor market continues strong, the economy's at a standard pace, and you also referenced in your testimony that that first quarter GDP initial react was also from front-end loading, as you noted, imports to try to avoid tariff impacts.
He probably wants to go
Also,
back
I
to
looked at the Atlanta Fed GDP Now model, which forecasts GDP growth for the
Damn it,
second
NBA,
quarter of
don't
this
ruin
year
our fun.
at nearly 4%. With
Kind of
core
conspiracy
GDP
theory over
forecast
here.
at 2%. Does that Atlanta model suggest a recession to you?
No, I would say it doesn't.
So in looking at your remarks about tariffs today and then the ones that you made during March and April, I was looking back at a Fed study that noted that up until March, tariffs have already been partially passed through in consumer prices, leading to a contribution of merely 1/10 percentage point increase in core PCE prices. And a Harvard study last week showed that prices have only modestly adjusted since the announcement of tariffs. Finally, the longer-term inflation expectations remain consistent with the 2% goal. Governor Waller laid out a pathway that allows for rate cuts provided that
We're getting to my white
average
line.
effective tariff rates remain
Watch for
close
141.
to 10%, or I assume he means 10% or
141
lower.
this week.
The labor market remains solid. Prices continue to disinflate.
You're already
So
above
given that data I've
137. This
outlined,
is
I'm
like
sure
as
data
high
that
as you're
you're
going to
very
get right
familiar
here.
with.
This is what you want to see, though. This is so good.
For the economy to avoid persistent inflation, do you concur with Governor Waller that there is a pathway for good news as it relates to the regulatory policies, the tax policies that I've discussed in a world with lower tariff rates?
This is decision-making area.
First, I
like,
wouldn't
in the
comment
next-
on any other
right here is
FOMC,
decision-making
members'
area.
comments one way
This
or
is
the
your
other,
monthly
but I will
95%
say this.
area.
I think many paths are possible here. And
Your
certainly
monthly
the one you
95% line
mentioned
is right here for you
possible
people with
one. We could
AMD.
see
It means
inflation
make
come
some
in
money. You
not
can
as
leave
strong as
runners
we
and things like
expect.
that, right?
And
That's
if that
what
were the
decision
case,
I would
that
be making
tend
right now.
to suggest cutting sooner. We could see the
You want to
labor
hold all of
market
it? Hey, that's up to you, bud.
weakening, and that would also
Your money.
suggest
And
cutting
you
sooner.
need
On
it
the other hand, if we see
now.
inflation coming in higher, or if the labor market were to remain strong, then we would probably be moving later. So I think a range of possible paths are possible, and certainly the one you mentioned is one of them.
In February of 2021,
Oh yeah, they do,
told
Duranto.
us in this committee that you would stay in your lane.
Hopefully
and not
those runners
comment
are there.
on President Biden's proposal for the American Rescue Plan or sharply increasing federal spending. And, you know, you
Something's
said it
off
was an
about
issue, but that you
stinks.
would stay in your lane and not comment on it. But here in this year, you have commented on this
I think
idea
610
of
is
tariffs
possible.
being set by the executive branch. So are tariffs in your lane, but a huge fiscal spending by the Biden administration not in your lane? Explain to the committee why you chose to be silent in February of 21, but outspoken this spring.
Sure. So we haven't commented, and it would be inappropriate for us to comment on the policy of tariffs. We don't have a view. It's not our job, and we just wouldn't do that. And just as we wouldn't comment on the reconciliation package that you're working
Tesla's
on
at a
right
weekly
now.
expected
We're not
move.
commenting on tariffs. What our job is
right there.
inflation.
It's
keeping
going to
inflation under
potentially
control,
pull back and then
also
reject.
keeping maximum employment.
Pull back,
And what
maybe
policies
reject
have
from like
what appear
350
to
and then
be
turn down.
short,
That's what I
short
see
and
as very
medium-term
probable there.
implications,
If you're going to
meaningful
squeeze through,
implications
you
for
just
that,
got to
then-
see something
then they kind
massive
of-
right
Not the
there.
policies themselves, but the
Like
inflation
you need this to
becomes
just
our
whip
job.
up and go.
You know my views on price stability. I think it's a first among equals
can do
in your
this.
dual mandate. I've argued for that.
Right.
I've introduced legislation to make
Or
the dual
this.
mandate the sole
That's my
mandate. And
assessment
we've
on
talked
Tesla
about
right
that
now.
before. But I was very curious about your thoughts on former president of the Cleveland Bank, Loretta Mester's quote that
Yeah,
I read from
AVGO,
last
it's
fall.
doing the
She
move like
says,
late.
I think that maximum employment is the maximum
So-
level of employment consistent with price stability.
Okay, so
In
let
other
me pull
words,
up the
she
charts here.
elegantly ties that together, that price stability is what you can have more control over rather than
Oh yeah, you're at weekly
all
move.
these other factors.
You're in the
that
same boat
enter
as
the employment
Tesla
picture, like
or
legislative and executive
AVGO.
branch.
Let
What's
me
your
clear
thought
this
about her
off.
quote?
I
You're in the
personally
same
think
boat as
that's
Tesla.
a very reasonable way to think about it.
Thank you very much.
Damn, we're
I yield
off.
back.
We got the new high, but
The gentleman from New York is recognized
so
for
I'd be
5
watching
minutes.
for this.
Thank you,
You're
Mr.
kind of in the
Chairman.
same thing as
Good
Tesla
morning,
where you
Mr.
can do
Chair,
this.
Chair Powell, and
Paul?
thank you for being here.
Or
Last
or
week, the FOMC
fall. And if those
decided
two
to
things, one of those two
maintain
things
the
happens,
target
I think you
range
reverse
for the
down and we get
federal
our daily
funds
pullback,
rate
like an
at
actual daily pullback down to like
4.25% to
230,
4.5%.
like a
While I was
10%,
not
15%
surprised
pullback.
by the decision to hold rates
That's what I think will happen if we set
steady, I
anything
was
like that up.
surprised
So
by the
if you're wanting
committee's
this to keep going,
revised
then and me to be
forecast
wrong
since
on
March,
that,
which
and not
represented
have a
a
trade set up,
decrease
then
of
you want this to keep going,
0.3
raise the
percentage
floor, and
points
then
for
have it not
GDP,
as bad,
a similar
or
increase for
you
core
want that to just
PCE,
keep
and an
doing
uptick
this,
in the
doing
unemployment rate
this,
for
violate
2
divergences the entire way, and I think it's a
4.5%.
good thing.
Can you explain the incoming data that the committee has seen since March
Oh, it's probably hard to hear
that
with
caused it to make this
sound. I'm
adjustment?
sorry about that.
Sure. So First of all, these are individual, this is not a committee forecast. These are just individuals submitting their own personal,
My thing is JP Morgan.
forecasts, and we don't bless those as a committee. But I think people are looking at the incoming
Watch out for
data
JP Morgan.
and having a range of different judgments. If you look at the range, if you look at the central tendency, you'll see that it covers quite a wide range. Those are the medians that you're talking about. I think so. Inflation
I don't even know
is
if
projected
that
to have
gets it.
moved up because of what we've seen, particularly from tariffs. And I
this
think if you
thing,
look at
man.
other outside forecasters, you'll see very much the same thing.
And
the
what
same is also
data are
true.
you looking for?
This is gonna.
We look at the
I think
incoming
JP Morgan
data on,
dumps with GDP.
We look at our own forecast and we ask
I mean,
ourselves
if
what's
the
likely
GDP is a
to happen.
surprise,
You know,
then
monetary
holy
policy
crap,
has to
but
be forward-looking.
see
A
it.
forecast is a prediction of what's going to happen in the future.
Thank you. In its statement, the committee announced that it will continue to monitor the implications of incoming data and adjust the stand of monetary policy as appropriate. Some analysts predict
TLT.
2 rate cuts by the end of the year are still on the
Yeah.
table.
I think after
Is
GDP,
this a fair and
we can
accurate
see what's going to happen
assumption?
here for
And
TLT.
what incoming data will the committee need to see
I literally
to
think TLT
consider
will be
these
back up to
cuts?
here. Up to
What
here.
what will actually happen with
Open to
rates is
this,
going to
though.
depend on the path of the economy, and that's highly uncertain. So I would just say what that means at this moment in time is.
Let me listen to JP
that,
for a bit.
A significant majority of the committee, but also there's
Just
a
watch
pretty
the spine. Let me
significant
listen up.
minority that doesn't agree, but a significant majority feels it will be appropriate to reduce rates later this year. And what that means is that each of those persons who wrote down
Reduce rates later this year.
cut in rates later this year, they think that there's some state of the world where inflation doesn't prove to be as high, or the labor market weakens, or some combination of those two things, that it will turn out to be more likely than not appropriate to reduce policy rates, subject to great uncertainty. I mean, we will, the story has been evolving, and our thinking has been adapting, and that will continue.
Thank you. Chair Powell, although a ceasefire has been tentatively reached in the Middle East, the situation still has the potential to open global and energy markets, especially if the ceasefire is broken. While at this point, Iran is seen as unlikely to close the Strait of Hormuz, that decision could change. How is the Fed assessing the current situation and incorporating those assessments as it considers future adjustment to economic projections and its stand on monetary policy?
So I think it's too early to know what any economic implications might be, and I would not want to speculate. Like everyone else, we are, of course, watching the situation.
Thank you. And Chair Powell, after reviewing the economic data following the meeting last week, it seems to me that the committee is indicating that we could be headed for a situation where inflation accelerates while unemployment rises and growth become more sluggish. In this scenario, this will put the Fed's dual mandate of maximum employment and price stability in tension with one another. In this scenario, how does the Fed balance these priorities?
What she just pointed out is the actual way that it could get the worst. So we'll see.
That isn't really our forecast that we will face such an issue in a serious way. But if that does happen, then what we do is we look at the two goals and we see which one of them is farther from its goal. Two variables, is maximum employment or price stability farther from its goal, and we prefer the one that's farther than its goal. And then we also ask ourselves, how quickly will they return to goal? It's a very difficult situation for any central bank, and I would say again, we're not in that situation right now.
Thank you, Mr. Chairman. Yield back.
The gentleman's time has expired. The Vice Chairman of the full committee, Mr. Heising of Michigan, is recognized for 5 minutes.
Thank you, Chair Hill and Chair Powell. Good to see you again. I got a lot to cover, so we're going to try and keep this concise. But following up a bit on what Chair Hill had been talking about, you had said in January 29, 2025, quote, "We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy." I would add energy into that, by the way. "We need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. This is no different than any set of policy changes at the beginning of the administration. However, December 18 of 2024 at the FOMC press conference, you noted, and I'm paraphrasing, that some Federal Reserve officials began to incorporate preliminary conditional estimates of how fiscal policies might impact the economy into
I'm
their
hungry. I got
forecasts.
snack.
This seems inconsistent, and I sidebarred with the chair to say, okay, did I hear this correctly, his question and sort of your answer? What I heard is that there was a belief that the IRA would not be inflationary, but that tariffs could be, therefore, suddenly you and others were commenting on tariffs. And for the institution, I know you try to be consensus-driven. Why are there FOMC participants making fiscal policy assumptions into their forecasting when you yourself said that fiscal policies need to be articulated before the FOMC can make a plausible assessment into their implications, what those will be?
Ooh, they're in
I think if there's
trouble.
different participants having different assumptions, that would render the SEP, Summary of Economic Projections, biased, meaningless,
They're manipulating
useless,
markets.
less
Ooh.
impactful, and when you're not comparing apples to apples. So wouldn't it make more sense for all the forecasters to make the same fiscal policy assumptions at the same time? Or if not, shouldn't each participant disclose what assumptions that they're using and building into that? So here's the question.
So that's
Good,
a
AMD needs to
great
drop.
question.
That's
That
the
really, when the
95%
Summary of
line right there,
Economic
guys.
Projections was
I told
originally
you it's
designed and
decision-making
put into
zone there
effect,
for sure.
in this way, the way it works is that individuals are free to make whatever assumptions
great
they want,
trade.
and they do disclose them. They disclose them in their speeches and things like that. So there will be situations where some people incorporate something
Yeah, but
and,
it's
and
not
others
illegal,
don't, and
Casey.
we try to be transparent about that. But that's kind of the way it works. When I say we don't take it into account, I'm really talking about policy and the committee as a whole, where we
Remember,
won't take
30-minute
things into
pullback's most
account until we
probable.
know
And you
more
believe
about it.
that the participants
Almost across
disclose
the board.
their assumptions when they're doing their forecasts?
Well, I think they do that in their speeches. Each people go out, you may have noticed there are a lot of speeches. And that,
I guess the opaqueness of the Fed has been something over the arc of my 15 years on this committee has been one that has been debated greatly, including auditing the Fed and a number of other things that have gone on. I've got here a brief moment. I do feel like I need to touch on interest rates. Not to be a shock, you asked how the family business was doing back in Michigan. Families involved in sand and gravel and aggregates and construction and things like that. It's been strong. We need more labor. We need a few other things on that, what's happening. But I mean, I think there's no recession. That's been established. There's no hyperinflation, or certainly
think you
not
pull
as
back
what
into,
some have been projecting.
the expirations.
Yet there seems to be higher than
30 minutes
expected,
before
or
the
certainly
close.
desired interest rates for many of us. And
just go
I'm
sideways.
curious
burn.
how high interest rates, they hurt Americans who are paying car loans, credit cards, mortgages. Just this morning, you had FA Director Pulte asking for lower interest rates, which would obviously impact home buyers as well. So what is it that's keeping, in your mind, the Fed from what many of us believe is the right thing to do, which is to lower some interest rates, and by the way, match what the Bank of Canada, Bank of England, the European Central Bank, the Swiss Central Bank, a number of emerging central banks, by the way, that's your own assessment on page 33, as where you're laying that out. Why aren't we doing what the rest of the world is doing? Is it because we're at full employment? Is it because of those tariffs concerns that you said weren't part of the analysis? Was it energy, groceries, durable goods? Why?
So you're right that if you just look in the rearview mirror and look at the existing data that we've seen, you can make a good argument that that would call for us to be at a neutral level, which would be, a couple of cuts or maybe more kind of thing. The reason we're not is the forecast by all professional forecasters that I know of on the outside and the Fed do expect a meaningful increase in inflation over the course of this year. When I said we weren't going to talk about tariffs and inflation, that was to say until we see what the policies are. And so now we know a lot more. It's 6 months since I said that. So anyway, I'd be happy to continue this with you.
Thank you.
Gentleman's time has expired. Gentleman from Michigan, Ms. Tlaib is recognized for 5 minutes.
Thank you so much, Mr. Chairman. Chair Powell, last month there was research published in the Journal of Urban Health that found that more than half of Black women of reproductive age, that's the term they use, in the counties that I represent that had experienced some sort of eviction during their lifetime. So that's like 50% of Black women in the two largest county, Wayne County and Oakland County in Michigan. And these numbers are horrific. As you know, were you aware of that?
No, I was not.
And you know, evictions are often very traumatic experience, but also it creates a cycle of poverty, but also this instability for many families. But especially when it comes to a lot of our Black neighbors, the access to equity, the access to housing has diminished even more. In Michigan, we lost more Black home ownership than any other state in the country during the last recession. So we know the housing crisis, I believe, is structural, and some may say it's a policy choice. While there are many factors at play, and you know this, Chairman, high mortgage rates, the finance rates and so forth, that drag the supply of new housing. But last month, new housing hit a 5-year low. Are you familiar with that?
I'm not sure exactly what statistic you are referring to.
Okay, I don't know. There was all this articles about the housing market and the impact of tariffs and so forth, and they said, again, it hit a 5-year low. And again, I'm getting this from a source. But this sets the market up for higher inflation and more burdensome housing costs to years to come. So Chairman Powell, you know, I'm looking at this monetary whatever policy framework that you guys have put together. Do you think that the way it's structured, and again, I'm trying to understand how you're looking at this in the housing crisis, do you believe it's eroding new rental supply under construction right now, leading to high inflation in future years?
So I think there are two things going on quickly. One is just there's a longer run shortage of housing in the United States, which there's nothing that the Fed can do about. That's not something we can affect.
Well,
there's also, if I may say, in the short run, rates are high, and that's going to weigh on housing activity. But the best thing we can do for the housing market, the absolute best thing, is to restore price stability so that rates come down and so that rates can be at a level that people can afford.
But don't you think that the restrictive monetary policy the framework you all put together undermines long-term price stability right now by reducing the supply?
No, I mean, I think
But
it
you're
restores
reducing
price stability. The point of higher rates is to,
So you don't think the higher rates is impacting future supply of housing?
So I think what that does is, I think interest-sensitive sectors like housing are very much directly affected when we cut rates or when we raise rates. That's right. But that's part of the mechanism for restoring general price stability.
So keeping the high interest rates does not impact future supply of housing?
It does not, you know, over the long...
I need to go back to talk to
over the long
women
run,
that the
Fed
study...
will not be, our policy will not be a driver of longer run housing supply in the United
So,
States.
okay, let me ask you, what is the difference? And I'm honestly confused. I want to learn here, and I'm sure people listening to this want to learn. What is the difference between demand-driven rent inflation and supply-driven rent inflation? Like, you guys use these terminologies. What is that? How do I communicate that to the public? What is the difference between supply-driven versus demand-driven rent?
You know, those are not terms that we use particularly often.
What's
but
supply-driven formula?
that would mean that, you know, that there's not enough supply to meet demand. But at the same time, it also means there's more demand than there is supply.
So are you guys ignoring that?
No, but as I said again, our policies will not affect in the long run.
No, I'm being
either
serious,
demand
because I
or
see somebody
supply
behind you
in
kind of
housing.
I'm being serious, y'all. We're talking about a housing crisis that is getting worse right now because we're not paying attention to future instability that the current rates, and you can raise your eyebrows and all this stuff behind. I don't know. I mean, do you understand? Like, I come from a community right now that I believe is now being impacted by the current framework that you're putting together, that I do feel like it's going to be long-term effects on the housing crisis, and you're ignoring it.
No, we're not, actually. We think the very best thing we can do is to fully restore price stability at the aggregate level. That will be the best thing for homeowners and for home builders and everybody else. That's in the long run, that is the single thing that Congress has assigned us to do.
But you see where I'm coming from.
Price stability does not mean price decreasing, by the way.
The gentleman from Wisconsin, Mr. Stile, who's also the chair of our subcommittee on digital assets, financial technology, and artificial intelligence. You're recognized for 5 minutes.
Thank you, Chairman Hill. Thank you, Chairman Powell, for being with us today. I want to dive into two actions the Fed's recently taken to get a little additional color on. Yesterday, the Fed announced that reputational risk would no longer be a component in bank exams. I viewed that positively. I viewed the reputational risk as often being a catch-all for political bias. I think it's positive to depoliticize bank exams and instead focus on the core and measurable
You guys hate
risks.
this woman.
Could you provide color as to whether or not any new new information came to light that led to the decision of the Fed to remove that yesterday?
I'm not aware of any new information. No, we just think it's the right thing to do, and of course made an announcement on Monday under Governor Bowman's, Vice Chair Bowman's leadership.
Why would it not have been done previously if it's the right thing to do? I agree with you, it's the right thing to do. Why was it? Any timeline as to why that was done yesterday versus previously?
No, I think this is a problem that we came to understand as a problem over the course of the last couple of years, and began considering what's going on here. We're hearing a lot of reports of debanking and that sort of thing, and over the course of really 2024 came to the view that this was a serious problem that we need to address, and we've said that publicly, and now we're doing this, and so are the other agencies, by the way.
I appreciate you taking that action. I do agree that there were real political bias in some of those exams, in particular as it related to regulated entities engaged in the digital asset space. Let me shift into the digital asset space if I can. Another action recently taken by the Fed, the Novel Activities Supervision Program was ended and withdrew several statements on digital asset related risks that deterred bank involvement in particular. You in the Fed and others at the Fed have spoken positively about the House and Senate work to regulate stablecoin in particular, a real opportunity to dollarize the globe and be a significant purchaser of U.S. Treasuries. Following that action by the Fed, have you seen an identifiable shift in banks or other regulated entities as it relates to engagement in the digital asset space?
You know, I wouldn't be the one to be picking that up first, but what I do see is a very significant change in the tone, and it really does reflect evolving thinking and the evolving status of the crypto industry, and I would expect over time we'll see more activity.
How is the Fed evaluating and overseeing banks or other regulated entities that are in the digital assets or crypto space?
So our view is that banks get to decide who their customers are. That's not our decision. And so banks are free to provide banking services to the crypto industry, to crypto companies, and banks are also free to conduct crypto activities as long as they do so in a way that is protective of safety and soundness.
Thank you very much. Let me shift gears because I want to give you just a little bit of an opportunity to comment on the housing sector once again, but give you a little freedom here to speak to that area. You correctly are trying to balance inflation and price stability. But also higher rates have a significant impact on the housing market, as shelter and housing costs are a significant driver of why many families can't afford the things that they need. Could you provide color as to how you're analyzing the impact that housing and shelter costs have on families and on inflation with your desire to maintain price stability at the interest rates that is currently set by the Fed?
Sure. So, we realize that people are feeling high housing costs and high financing costs. In terms of inflation, we look at something called owner's equivalent rent and rentals, and that's meant to capture both rented housing and owned housing. And it's been very sticky. It's been one of the stickiest parts of inflation. I'm happy to say now it actually is coming down quite regularly. That's very good news. That's been the part, really it's been the service inflation that's been stickier than other parts of inflation. So that's good news for people, I think, and it is showing through into measured inflation now. Again, in the long run, the best thing we can do is restore price stability and let the market work. Even then, though, we're still going to have a housing shortage.
What data do you think is leading to the reduction in the rent equivalent?
I just think it took time. So the thought is when you would think that if rents come up every year, you would think it would take 1 year or 2 years for a lack of growth in rents to show up in a lack of growth in housing prices. It turns out it takes 4 years or 3 years. If you're an existing tenant, it's a complicated thought, but if you're an existing tenant, you don't actually catch up the way you would if new tenants came in. And so that's made the measurement of inflation stickier. But I'm happy to say we've been through that period now, and we are really seeing now housing
Meta
services
looks like,
inflation pretty close
that's the
to
zone to
where
pay
it was
attention
when
to.
inflation was solidly at 2%.
Right here.
Thank you. I yield back.
Gentleman yields
So
back.
watch if we lose
Gentleman
it
from California,
and then
Mr.
head down. We're
Ricardo,
kind
is
of leaning
recognized
towards
for 5
that.
minutes.
But
you,
this
Mr.
is
Chair.
still very possible.
Chairman, thank you for your testimony today.
So divergence
I
or a lower
appreciate
high
that your dual
on the 30
mandate
minute.
is full employment and
Down
price
here, right?
stability.
Looking for that
I
nice
appreciate
little,
your efforts on
oh,
behalf
we're
of the
negative.
country
Oh, we're
to achieve
positive.
those.
Oh, no, we're actually negative.
My understanding is that critical data is collected by the Bureau of Labor Statistics to help formulate
SPY go.
the indicators that you rely on, that we rely on to
Yeah,
understand
SPY is getting a
unemployment
5-minute
rates,
divergence right now,
CPI, and
100%,
other
right?
inflation indicators.
Damn,
We
no,
are
not yet.
certainly hearing a lot
We could
about
still
the
go
impacts
higher
of
then.
DOGE on our
We pull back
workforce.
Wednesday
and
morning or
specifically
something?
about the elimination of many of those positions in BLS. And now we have a proposal in front of Congress to cut $56 million from that agency. Are you concerned
It
about
happens this
the
fast.
ability of your team to get accurate data and about the ability to
That'd be interesting.
have reliable indicators to make good decisions upon?
I wouldn't say that I'm concerned about the data today, although clearly there has been a very mild degradation of the scope of the surveys and things like that.
Apple's rude.
But I would say the direction of travel is something I'm concerned about, and that is
Apple is really wanting to turn down on the
measuring the
2 hour
U.S.
though.
economy carefully and well is a project
Apple's
that's
still
been
gonna be
going
good.
on.
It'd be
and we're getting
interesting,
better
but
at it for 100
yeah,
years and
I think
more.
this is going to set some
And
traps.
it's really
here.
important,
I think
not
you're
just
maybe
for
even
the
going to
Fed,
see
but
this.
for Congress
and
and
then
for
we see it go
businesses,
up
frankly, to
again,
know what
and
really
then
is
we
going
reject
on in the
off.
economy, what's happening. Is growth
You could
high?
see,
Is
like,
low?
if it gives you enough
You know, those
time,
sorts of things.
like
So
we
I
pull
think
back into
it's-
Wednesday
I think it's a
still,
smart
and
investment
then we
to
go
just
up. We can go
continually
up
try
into
to get
Friday.
better at measurement of what's happening in the economy, and I don't
But
like to
overall,
see,
you're looking for what?
you know, the kind of stories
potential
I'm
for a
reading,
roll
and
here.
the idea being that the
Rolls
data's
on
going to
the
become
2
more
hour,
volatile
you
and less
wouldn't really
reliable.
use your
That's
5
not
as a
gonna-
guideline.
It'll make it more difficult for
Right,
the
see
private
30
sector
minute,
and for you
30
and
minute.
for us, and I don't like to see that direction.
I agree. Thank you. I appreciate that it's not your role to comment on the advisability of specific policies, but given your critical role in ensuring price stability and reducing inflation, I have had conversations with,
Friday.
quite recently, just a week ago, with a C-suite executive of a major world global retailer who informed me, because I asked, why aren't we seeing the impact of these tariffs and price data yet? And he said, it's coming in the third quarter, because it takes time for tariffs to work their way through a distribution chain. Often what you have on the shelf today may have been imported 2 or 3 months ago. Is that your understanding? Do you anticipate there may be impacts down the road?
Yeah, that's very much what I hear. I happened to meet with an unusually large number of business people in this last FOMC cycle, and that's a typical thing that they'll say, especially the
Maybe not,
retailers, that
NBA.
what's being
Never know.
sold now was in inventory in February, let's say, and it just isn't showing up yet. So we do expect to show up, tariff inflation to show up more, but I want to be honest, we really
Pullback's
don't
just a
know
little more
how much of
probable.
that's going to be passed through to the consumers. We just don't know, and we won't know until we
For
see
the
it. It
day,
could be lower
till
than
we
expect,
till we
it
make
could
it
be
to end of
higher.
day.
We have to wait and see, which is kind of
Completely
what we're
flips
doing.
at the end of the day.
I appreciate the
change.
uncertainty. Another thing he told me that had me very concerned was that often they will increase prices on goods not subjected to tariffs to compensate for the very substantial losses they have to suffer with the increase of tariffs on relatively price elastic goods. So in other words,
People have
necessities
no idea what's going on.
will also tend to bear a higher price, even if they're not subjected to tariffs. Is that your understanding of the potential impacts?
You know, that very much is something that companies will tell you that they do. If they can't cover the losses on the thing that's being tariffed, they'll find other ways to do it. We actually don't have prominent examples of that yet, but that's certainly a possibility. And that did happen in the last tariff episode with washing machines and dryers.
Thank you, Mr. Chairman. And finally, there's
the best looks here.
indications in the introduction of the report
Can't really see it clearly.
that the Fed is losing its ability as we see interest rates getting closer and closer to the minimum
Watch for the
threshold.
2 hour confirmation
The
in
ability to
43
stimulate
minutes, and then
this
we'll
economy
probably
in
see
times of
some kind
recession.
pullback again.
We haven't had a recession, or at least we haven't had an extended recession.
I'm down for a
in
pump,
a decade
though.
and a half.
We can extend it even higher.
Particularly
That's
concerned
fine.
now as
Give
we
me
are
the
looking
monthly
at
move,
debt
you know?
that is being considered to be imposed on future generations by this
Give me
particular
610
bill.
this week.
Could there be a combination of very high debt and very little room to move in monetary policy that could
Maybe
undermine our
600
ability to
gets
respond
tagged
to the
first,
next
though.
recession?
So we faced that issue quite a bit in the era of very low interest rates. But, you know, we're at higher levels of interest rates now, so there was
Gentleman's time's
significantly more room to cut than there was then.
Thank you.
Gentleman yields
Mr.
back. Gentleman from Wisconsin, Mr. Fitzgerald, you're recognized for 5 minutes.
Thank you, Chairman. Chairman Powell, thanks for being here today. Appreciate it. I want to go back to something we had some brief discussions about this in the past, but in September of 2024, with core inflation still being above target and the labor market was holding steady at the time, the Fed made a decision to cut rates by a full 0.5 percentage point. It kind of raised some serious questions as to whether or not the data truly supported such a move at that time. And I think some of us were surprised that it was a full 0.5%. So can you revisit that again, what the Fed was thinking at that time? Because it seems to be somewhat of an enigma now. It stands out as, why was this done? Why was the 0.5% done at that point?
I'd be glad to. So, first of all, actually the inflation and employment readings were very similar then to what they are now. They weren't terribly
True,
different, a tenth or two.
Right.
But the difference then was, you mentioned that the labor market was stable. It wasn't. The unemployment rate had actually gone up almost a full percentage point. I was very clear about this. We were very clear about it in real time too. The concern at that time was that there really hasn't been an experience, or hadn't been an experience in the modern era in which the unemployment rate has gone up close to 1% that hasn't been followed by much higher levels of unemployment and a recession. So we were looking at that and saying, and remember, at the point we're talking about, the federal funds rate was 5.3%, so definitely very restrictive level. We were the last of the big central banks to cut. So we wanted to make a statement that we were supportive of the labor market and not just inflation. We've been focusing on inflation. I was quite clear about this. So
I know,
it was
right,
all
Bernie?
about the labor market. Inflation
Hopefully
was
you
the
can read
same,
into those.
and, unemployment was roughly the same, but it was the rate of change with the unemployment rate that raised a lot of concerns. And remember, we were being criticized for being late to cut. So we could have done 25. If we'd done 25 in July, we were criticized for not cutting in July. Instead, we cut 50 in September. And it seemed like the right thing to do. And at the end of the day, we do what we think is the right thing when we think it's the right thing to do. We don't take into consideration political factors. If we start doing that, I don't know where that stops. Once you start considering elections and stuff like that, where does it stop? So
And I didn't want to insinuate that it had anything to do with the election itself, but there just seems to be some very similar numbers right now. And I'm wondering, and I don't bring this up because I want to kind of make a point about did the Fed do the right thing or not. I bring it up because it seems like everything's in place right now to kind of do the same thing, make the same move. I know this morning already, you've talked a little bit about where you were on inflation right now and kind of what you're watching, but is there any lesson there? I mean, are we in a position where it would be appropriate to do something as big as a 0.5% cut again?
Well, look, as I said earlier, if you just look at the basic data and don't look at the forecast, you would say that we would have continued cutting. The difference, of course, is at this time, all forecasters are expecting pretty soon that some significant inflation will show up from tariffs. Now, and we can't just ignore that, but we're not. We're just saying let's wait and see more. That's all we're doing.
Okay.
And
So this is important. So what he's talking about is when the tariffs hit, we will see a spike in inflation. That is true. He's being honest with you. The problem that he might run into is a lot of the time the Fed likes to cut the rate at exactly the wrong time. And exactly the wrong time would be, what would they say? We're expecting to see these in Q3. So the exact wrong time would be when? Like September, right? like literally right at the end of Q3. So I'd just be watching out for that. It is a real problem, and it is the real thing that they could get wrong. if they don't get it wrong. I really don't know how they get it right. We just keep rates higher, probably.
Produce big increases, that would matter. And if we saw the labor market weakening, that would matter too. But we don't see those things.
What about supply chain? In 2020, that was a big issue, obviously related to COVID. But I know myself and other members, when we're in our districts and we're specifically talking to light manufacturing, there's concerns about the supply chain. Is that part of the data package that you review when you make a decision about where we're headed in the future?
Very much so. I think that's one of the great, well, won't call it a great thing, but one of the lessons to be taken from the last episode is supply chains really matter. We're watching that carefully. It's too soon to say really on that. We're not seeing it yet, but we could.
Gentleman's time has expired.
Thank you, Chairman. Yield back.
Thank you, Mr. Fitzgerald. The gentleman from New Jersey, Mr. Gottheimer, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, as a member of the Intelligence Committee, I'm deeply concerned about the threat of Iranian cyber attacks on our financial system as retaliation for our strikes on their nuclear facilities. In its cybersecurity report last year, the Fed acknowledged that critical infrastructure, including financial services, is at risk with rising geopolitical tensions. Iran has a history of targeting American infrastructure companies and financial institutions and banks, which could obviously threaten and cause economic damage. What actions is the Fed taking now to monitor and defend against Iranian or proxy cyber threats targeting our country's financial institutions?
So we're in touch with the other regulators and the parts of the
about to
government
cut the rates, Jim.
that work on cyber.
September, baby.
As you know, and we're in touch with the banks to say, for people to be on the alert for things like that to happen, and also we're on the alert because we're a target as well. So you're right to raise it. It's a big issue, and
Do you feel like you have the resources right now to be prepared for that?
Yes, I mean I think we do. We
Even
spend
July
a lot,
is
and
increasing.
The government generally spends a lot on these things, and
But look at September, baby.
You can never ever be comfortable.
66%. I start to like those odds.
Getting better, so we need to
I
keep
like
it get better.
66.
Thank you, Chairman. Switching gears, the President and members of his administration.
my roulette strategies. I like
recently called you
66%.
out, various name calling for certain decisions you've made. I know that some people worry that the President's bullying will impact your decision making. I know you work together, and I know that and respect, obviously, your independence greatly. Anything you want to add and give you a chance to reiterate your independence to the American people?
Yeah, I would just say we're focused on one thing. And that
Sorry
is
about
we
it,
want to
Richard, my
deliver
bad.
a good economy for the benefit of the American people. That's it. And anything else is kind of a distraction. I don't mean to refer to any particular thing, but we stay focused on that task all the time. We always do what we think is the right thing to do. And, we live with the consequences. And I don't know how else to do the job.
Right, so the name calling and the Mr. Too Late and all that stuff, the American people shouldn't worry about that. You're focused on being independent.
That's what I care about. I care about doing the job for the American people. The things we do matter a lot for people's lives, and that really concentrates the mind. You want to just stay focused on that task. As long as you're sitting in these chairs that we occupy, focus on that task, do what you think is the right thing, and take the consequences.
Thank you, Mr. Chairman. You've previously stated that you view stablecoins as a form of money. Payment stablecoins are already being used for both retail and wholesale payments, as well as for settlement. Recently, this committee passed the Stablecoin Act and the Senate passed the Genius Act, both aiming to establish clear regulatory frameworks for fully reserved dollar-backed payment stablecoins. Given their design to maintain a stable value,
we don't need the Kardashians. We need a show
should the
called
SEC
The
or other regulators
President.
explore treating these stablecoins as cash equivalents for accounting or financial reporting purposes?
So let me say, I think it's a great thing that bills are moving. We need a stablecoin framework on that particular issue. I don't have a view for you. I can come back to you on that.
I'd be grateful. Thank you. High rates have also caused, as we've discussed, the cost of paying off our nation's debt to skyrocket. The CBO estimates that interest payments will cost the U.S. $1 trillion in fiscal year 2026 and continue to rise to almost $1.8 trillion by FY 2035. How do you see us continuing to be able to afford to pay off our debt at this rate? And as the U.S. continues to borrow, how does that impact your decision to keep or cut rates? Obviously, foreign countries like Japan,
question.
who are significant
Let's go.
buyers of our bonds, have started decreasing their purchases significantly. Other internal pressures worldwide are having that impact.
I don't know if that's
Are you worried
true.
about this global issue?
Fiscal policy and it really is not our job, and it's not something we take into consideration in making monetary policy. That's really elected people's jobs. And I would add that, For some time now, the U.S. federal fiscal policy has been on an unsustainable path, and, you know, I'll limit myself to that.
Last question. Last week, you chose to keep rates steady, and families in our state, as you'll hear from a lot of people today, are really struggling with the higher cost of borrowing and putting off bigger purchases on things like cars and homes. As a result, their wallets being crushed by these price hikes and obviously the president's tariffs. What do you have to say to Jersey families who are struggling with higher costs, and how you look at how they should forecast themselves for their own families?
We're committed to returning inflation sustainably to 2% and keeping it there in the long run. And what we're doing now is we had cut rates by 100 basis points, so they've come down quite a bit. And you know, when the time is right, I expect that will continue, and that will depend on economic factors, you know, in the coming months for starters.
Thank you. I yield back. Thank you, sir.
Gentleman yields back. Gentleman from Nebraska, the chair of our Housing and Insurance Subcommittee, Mr. Flood, you're recognized 4 or 5 minutes.
Thank you,
Great
Mr. Chairman.
cuts.
Chairman Powell, later this week, the banking agencies will be proposing changes to the supplementary leverage ratio, which we think are long overdue, considering the Fed in 2021 indicated that they would soon put out proposals for reform to the SLR and never actually did. However, our understanding is that the proposal being considered this week will not allow for treasuries to be excluded from
There's
the
a possibility,
SLR
Richard.
calculation.
I got to do some
Secretary
stuff
of
this
Assent earlier
afternoon,
this
but
year had
I'll link up
argued
with
that such a
Patreon and
change
post
could serve as a
something, or
boost
post a
for
link,
banks
maybe a private
and their
stream if I
ability to
can
intermediate
today.
in the treasury market, and could potentially pull treasury yields down 30 to 70 basis points. Chairman Powell, do you agree with the Treasury Secretary's comments on the potential positive impact of SLR reform on the Treasury market, and what is the rationale for not excluding Treasuries from the SLR calculation in the proposed rule?
So I agree that when the leverage ratio is binding, it discourages banks from undertaking low-margin, fairly safe activities, such as mediation in the Treasury markets. So this should encourage more mediation. I don't have a numerical estimate of how much that would matter, but I do think it would matter. I think it was important. I've supported leverage ratio reform for a very long time, since before 2021.
Chairman,
in terms of the structure of the thing, I think we're seeking comment on a particular proposal that doesn't involve exclusion, but we're also asking a question about exclusion.
Mr. Chairman, considering the Fed temporarily excluded treasuries from the SLR calculation during the COVID pandemic, were you aware of any safety and soundness or financial stability problems that arose as a result of that decision? And if not, why was that relief terminated in 2021?
So that was an emergency measure. From the beginning and end, it was an emergency measure. I think.
For today, guys, I do have to hop off right now, but I will tomorrow start to do a little bit longer in the morning, at least another 30 minutes or even an hour past right now. Today, we're not going to be able to work out, but from here forward, we should be able to have a little bit more time in the morning for you guys. So I do have to hop off, but I look forward to seeing you guys on YouTube later and tomorrow during the live show, where we will be extended a little bit longer out. So thank you guys. Have a great day. Go listen to Jerome Powell if you want something. But right now, the most probable thing is that we are going to see a 30-minute pullback, and then we are going to see if we're able to head up into GDP, or what if we continue to squeeze, right? We're still looking for 30-minute pullback. We know how it could squeeze to drag this out to Friday. All right, guys, thank you so much. Have a great day. Peace out.